change the world. You tell me that it's evolution. Well, you know, we all want to change the world. But when you talk about destruction, don't you know that you can count me out? You know it's gonna be.
Woo! Here we go. MSTR True North episode 20. We are sitting at Bitcoin $83,940 on the on the verge of being at Bitcoin at 84,000 on March 14th. Shout out Josh Mandel. He called this 84,000 Bitcoin on March 15th, or on March 14th, on November 5th, 2024. So here we are 4 months later, and we are right in line with where he is expecting Bitcoin to be. I'm pretty sure back in November, everybody was bulled up on strategic Bitcoin reserve. Trump is president. Everybody thought Bitcoin was going to 200,000, not down to 84,000. I'm pretty sure everybody told Josh he was crazy. And here we are looking at Bitcoin at 84,000. Anyway, welcome back to MSTR True North. This is episode 20. We've been going 20 weeks now. I think we only had 1 or 2 weeks break, and we're cruising here. So tonight we are going to hit on quite a few things. We're going to talk about MSTR True North, just a brief history so people know the background, get into the macro landscape, strategic Bitcoin reserve, what's going on in DC politically. We're going to talk about Strike, the $21 billion plan, and Strike as a potential role in a portfolio. Tim just recently today had a interview with Fong Li. I think that will be airing later this week, sometime soon. We'll get a quick intro on that. We'll do an update on MSTY against Neithu. And then there's 25 things that have happened since last Wednesday. So it's just totally incredible. Every week when we do this show, I'm wondering what we're going to talk about. And then I start to think about everything that's happened in the last 7 days. And it blows me away every single time. So that being said, MSTR True North is a group of people that get together every week. We talk about what's going on with Bitcoin, what's going on with strategy, the stock, strategy, the equity, and at the cutting edge of what is going on in this trade. It is one of the most complicated equities in the entire market, and to me, I think it's the most fascinating equity in the entire market. So that's a great segue to pass it over to Tim. Not financial advice, and we'll go from there.
What you're about to hear is probably going to be 76 things. We might go for 3 hours. I don't know, but it's not financial advice. Back over to you, Jeff.
Bingo. None of this is financial advice, but we love talking about this stuff. And we were going to have this conversation every week anyway, and we just decided to go out and do it publicly. So here's some things that happened in the last 7 days. Strategic Bitcoin Reserve, a presentation by the Bitcoin Policy Institute, which had Saylor and a bunch of other Bitcoin very popular names in the Bitcoin world. A presentation on Bit bonds, recommending that the U.S. government issue bonds with the pieces of Bitcoin. Bitwise issued a Bitcoin Corporation ETF called OWNB, OWNB. Strike announced a $21 billion ATM issuance. Seize Capital announced a BTC Alpha Fund, a Bitcoin-denominated Bitcoin yield fund in Europe. The Strategic Bitcoin Reserve, there's possibility for the U.S. government to buy Bitcoin in a budget-neutral fashion. Cantor announced their custodians for a $2 billion lending program. And the list goes on. So many things have happened in the last 7 days, and wanted to give a general background and landscape. And maybe I'll kick it over to Dan. Dan, I know you've got some tweets prepared just to give us a landscape so we can go into this conversation of what's going on here.
Yeah, sure. Awesome to be back, guys. I'm super excited. First time I felt good about this stuff in like 4 months. So let's I don't know. Maybe it's just because it's spring, but life.
I'm bullish. I've got some whiskey. I haven't had whiskey the last couple of weeks, and I'm feeling. I think we're in escape velocity kind of thing.
I think we fucking definitely bought them.
Let's hope so.
Yeah.
Yeah, Bitcoin needs to spring forward. That's
Yes.
for sure.
I mean, oh my God, what a bottom. Anywho, I'm going to share my screen. We'll go over brief macro stuff just to like kind of get a backdrop going. And then yeah, so here you go. Here's the tab, sharing that.
Yep.
Do you see my screen, Trading View?
Bingo. Yep. Trading View.
All right. So the dollar broke. That was kind of one of the first macro things people were excited about before they all turned bearish for no real reason. So the dollar broke. The dollar's getting weaker, which is exactly what kind of Trump wanted. And it is, I don't know a lot about this. I know it effectively, or does anyone have a really good like understanding of why the dollar breaking is valuable, or a good way to put it into words?
Well, people are selling dollars for other assets.
Right.
So when there's fear in the markets, the dollar generally gets stronger, right? Because people are rotating from other assets into something that they feel confident in, which is cash or the dollar. So I mean it's a very liquid market it's connected and tied to all global macro.
Cool. Okay, so yeah, that's been something people have been talking about, and no one's talking about it now, but that's quite exciting. We can look at the Treasury yields, the 10-year. So these are different time frames. So the current one is the purple. The 10-year is about 4.2% interest rate, where 1 year ago is 4.2, and a month ago is 4.5. So it's obviously dropping, which is something the administration was looking to do, and potentially a reason why they're kind of crushing the stock market. And so a couple tweets from Donald Trump. And I don't think he's as bearish, or he's not trying to wreck the stock market as much as people are worried about, simply because this was a tweet from earlier in February talking about how he's looking to impose tariffs simply to kind of have a bargaining chip over the rest of these countries that are imposing tariffs on the United States. So clearly he's trying to just get an upper hand and not necessarily tank the market. He's just trying to use his bargaining power. And then we've seen him ease off the throttle here on these tariffs as the other countries have kind of conceded. I think that being the most recent one in Canada. Then this tweet here, obviously the 30-day ceasefire in the Russia-Ukraine war is huge and definitely bullish for risk assets, I think, and something I think we're going to look for moving forward. So another kind of bullish thing on the horizon. This is just a little table of things. So we look at Tesla price too. I do want to kind of reference Tesla. So Tesla's given up all its gains pre-election, and you can see while Beset and Trump have been saying we don't look at the markets. After Tesla's performed like this over the past 5 months, Trump has issued this tweet explaining how essentially promoting Tesla stock to the American people.
I'm buying a Tesla. Donald Trump says I'm buying a Tesla. Right.
Yeah, and they're like, we don't care about the market. Like that's complete horse shit, right? Like they obviously care about the market. He maybe doesn't care what the market does in the very short term, and he doesn't want to tiptoe around his policy. But over the long term, he's literally trying to sell Tesla stock here for Elon. So
Dan, Bitcoin is pumping. Keep talking.
Okay, good. The final metric I do want to talk about is global liquidity. Global liquidity for me has always been the holy grail. That's a metric created by Cross-Border Capital, which looks at repo markets and different ways to see in which how much liquidity is in the system, and Bitcoin and risk assets have tended to follow this. And we can see we're still global liquidity here is in orange, and it's still trending upwards, right? And it's nowhere near its 100% index, right? So again, we're right here at the 40th percentile. And while this is, I can't remember, I think this is a slightly lagging indicator, but we got plenty of runway in terms of global liquidity. And that's really the only true, I think, reason for these Bitcoin cycles is that global liquidity cycle. So things are totally good there. The cycle is not going to end anytime soon. We're not entering a tightening fiscal environment. bear market scenario, and rates are coming down. So I don't think there's a lot to be scared of, especially with the positive jobs report and lowering inflation.
Inflation's coming down, positive jobs report. I mean, you hit on all of the global macro environment, everything that's going on right now. I mean, obviously there was some big fear in the market. S&P 500 is giving up gains, but still, right? I think S&P 500 is up 8 to 10% in the last year, which is kind of the average return in the S&P 500 going back historically. So I think this is it feels like a relatively normal correction. Could there be more uncertainty in the market? Sure. But when you zoom out and look at everything that's going on from Bitcoin's perspective, I can't help but to not be I'm bullish here. Like I'm incredibly bullish here because I almost feel like there's just this massive information asymmetry because of everything that's happening so quickly, so fast, how quickly the market is evolving. Basically everything I mentioned, right? Strategic Bitcoin reserve. 99.9% of the world has no idea that happened, right? People are going to digest that over time, and that probably won't hit people's radar until Bitcoin's back above 100,000, or 120,000, breaking into price discovery. So I expect that not to come back on people's radar, until that happens. You've got.
And to that point, I was sitting with some people the other night on Friday night, and they talked about all of Trump's policies except the strategic Bitcoin reserve. And those are people who have reached out to me about Bitcoin in the past, right? So it's all defined. I think price defines narrative. People talk about it and look for things and look for positive things when the price is going up. When the price is depressed like this, they find bearish things. They don't even listen to the bullish things. So somehow you have to take your emotions out of this, and it's so hard.
It's difficult being plugged in and watching what's going on because you think the sentiment in X is a representation of what's actually happening in the market when reality is it may just be completely unplugged. It may be completely removed.
The algorithm's fucking with you. The algorithm's feeding you negative shit if you feel bad and you're engaging with bearish posts. Like it's terrible.
Just remember your feelings are bad and you should feel bad for feeling them.
Just be a robot. Be a dead person or be a robot, right? Dead person portfolio always wins. And if you're a robot, then you have no feelings and none of this stuff matters. Somebody else also mentioned in the comments here, what about the housing market? Which is this is something I've been really interested in recently, just thinking about the risk of the housing market. I posted about this earlier today. I was doing some analysis with Grok, which is so cool. Like I feel like I have my own personal analyst that is like sitting by my side there for anything I want, whenever I want. And I just ask Grok and I get instant feedback. It's amazing. But I was really curious about the housing market and how it compared to the GFC, the Great Financial Crisis in 07, 08, and trying to identify where the risk sits. All right, because we know that there are, so there's a significant number of mortgages that are propped up by the federal government as a result of one of the Biden policies that came out a couple of years ago to help pump and provide liquidity within the market. And this is a fundamentally different landscape to where we were in 07, 08, where there were these opaque financial instruments that a lot of these private companies were holding, right? The CDOs, collateralized debt obligations. And when a bunch of those went sour, you have all these private companies that are failing, and the government ended up stepping in and backstopping some of these private companies to basically save the economy. But risk assets sold off, all these other assets sold off, and we established a new base to move forward from in 2008. Now this scenario is a bit different because the risk isn't with private entities; it's with the government itself. It's almost like just completely skip the middleman, where you've got a significant number of mortgages that are in default, can't afford their mortgages, not paying their mortgage. And there's some really good evidence on it. If you look at houses for sale, I think there's even some data available on these federal programs. And it'll be interesting to see how this plays out. But the one thing that I come back to is this all seems like a money printer scenario, right? If there's a big issue in the housing market, the risk sits with the federal government anyway. They're going to pump liquidity into the market to save the economy. And that's that's kind of my short, quick, and dirty analysis on the housing market. So, I mean, we could see some rough, a rough patch in housing cost. It's only a rough patch if you have a big portfolio of real estate. But if you're young and are looking for a house, there may be entry opportunities at some point here in the near future, when the market recognizes, one, there's a problem, two, the cost of homes is too high, and maybe there's a better place to park assets that's more efficient. So,
I get a call or a letter every week because somebody wants to buy my house. They want to buy it, flip it, and the rates have to come down, I think, before the housing market is really going to surge again. And I'm still a little bit nervous about Trump tanking the markets. I think if the Fed capitulates and just lowers the rates, great. But if they don't, I think he'll just dig in his heels and force their hand. What they call it, a taper tantrum, right? If the market doesn't get the lower interest rates they want, the market just crashes.
Until they get the interest rates they want. Yeah,
exactly. And I'm not long-term bearish on that necessarily. It's just a repricing event, a month or two or whatever, and the rates come down and then everybody's off to the races again. But whether or not we get that temporary tank, I don't think it really matters, because the spending bill that Massey was literally the only Republican to vote no against, because it's spending the same shit we've always spent.
Oh yeah, that's
It's just spending.
Fuck. So there's just so
There
much
were no cuts in there. They basically took. Well, this is me. Obviously I haven't fucking read it, but the rumors that I'm hearing is that they just took all the Doge cuts and were like, oh, okay, well, we can spend all the money we saved from Doge.
Right.
So it was just like a shell game and just moving freaking money around.
Yeah.
So the money printer is gonna go burr, period. There's no way around that. So Bitcoin goes up, strategy goes up.
Right. Yeah. All the Doge cuts basically went to defense. And the budget was in line. I think it was $4 trillion for 2024. So there was no increase from 2024. And in 2024, I think the U.S. government had a $2 trillion deficit. So, Doge is doing a great job, I guess, by making all these cuts to these government institutions, but the budget's flat. And if the budget's flat, you still have a $2 trillion deficit, which adds to the $38 trillion deficit. Now we're at 40. And you've got all this huge pile of debt that needs to that comes up for renewal, and they're going to reissue the debt at higher interest rates. So it's I mean, the whole market's a little crazy. So I get uncertainty right now. There is some uncertainty. I feel bullish Bitcoin as a risk off. It's like the vacuum that potentially catches everything on the other side. But it's also the most liquid equity in the entire market.
Jeff, can you put that comment up? This is just so good. We all win. Stop the stream. Nothing to talk about.
Yeah, we all win. Yeah, there it is. Yeah.
Okay,
yeah.
We're done.
Yeah, right.
2.8% today, right below expectations. I mean, we're heading in the right direction, or no?
Yeah, I think deficit. Here we go. Deficit won't be flat if the budget is flat. Deficit will decrease. Interesting.
Yeah, if we can't afford to pay the freaking interest payments, the rates have to come down. I don't see. The only other way around that is like a legit default. We just say, no, we're not paying our debts. And that would just cause world chaos. So that's not going to happen. So the only alternative is a soft default, where we just, deflate the currency and deal with inflation. Yeah,
I've been really fascinated by two things recently. It's the real estate market, and somebody said, housing market's still hot here. Inventory is really low, demand's really high. Well, that's the thing. Inventory is really low because the interest rates are so high, and nobody wants to sell. How many people want to exit if interest rates come down to 5? Does that change the market? What does that market look like? Always desirable areas are always going to be desirable forever. They're desirable for a reason. They've got a view, good city, or good school district, whatever's going on there. But in more rural locations or suburban locations, Austin, Nashville, like, or Tennessee, like, the flyover states. I think that could be a different market. So it'll be interesting to see how all this kind of plays out. But yeah, there's so many moving pieces in this entire market, right? The budget, the housing market. Anyway, the other thing you brought up, Soleil, is debt, right? I've been really fascinated with the history of debt. I've been just reading as much as I can about what is debt, who owes the debt, who owes the debt to who, and what does it mean? Like, what's the, like, how did we get here? And it's a fascinating equation to try to wrestle.
That's not the book that Seyfedin Ammous recommended on the Saylor interview, is it?
First 5,000 years?
Might be. I got to double check that. It's on my TBR.
Debt, the first 5,000 years by David Graeber. This guy is RIP, but he passed away in 2020. But I mean, like, just an incredible brain. This thing is incredibly dense. He's got an hour and a half interview at Google where he goes over the book, and that's a really good intro, and you dive into it. It's fascinating.
I remember Safe's biggest takeaway from the book that he was talking about, I don't know if it's the same one, was that interest rates seem to be coming down forever. Like, since debt existed, the interest rates have trended toward zero, which I think has got to have some interesting unintended consequences if that happens forever.
And what if rates go negative?
Yeah.
Then you start to really ask who like, what's the purpose of this debt? Like, if you know what I mean? Like, what? I don't get it.
Yeah, we can come back to earning Bitcoin yield on Bitcoin later.
Yeah.
I'm not optimistic about it, but I can't wait to hear what people have to think about this one.
Okay. All right, let's switch gears. All right, so we've got the macro landscape. Thanks, Dan. That was an incredible overview. Obviously, there's so many things going on. A lot of people are a bit confused, and if you're holding, the folks that are holding, some of these larger Mag 7 assets, and you start to zoom out and you question valuations, they're difficult for me to wrap my head around or put a framework around. Like, how does this valuation make sense? Especially if you are thinking in a Bitcoin lens, it's difficult to compare two different systems, right? Like, you now have two measuring sticks. You've got a fiat measuring stick and you've got a Bitcoin measuring stick. And when you try to value the fiat equities in a Bitcoin system, they don't make sense. And when you try to measure the Bitcoin equities in a fiat system, they seem incredibly undervalued. So it's just interesting. You've got these two different measuring sticks where you're starting to compare these equities, and it's a unique framework. So anyway, big news this week. Obviously, Strategic Bitcoin Reserve. I'm going to pass it over to Tim. You were at the Bitcoin Policy Institute. There were the Bitcoin Policy Institute presentation in DC on Monday this week. There were presentations by Saylor, some senators, and Andrew Hones talking about Bitbonds. I would love to get your perspective as a person that was sitting there. You took your picture with Saylor. You were wearing an orange tie. You had the whole thing going. What'd you think? How'd it go? What was the sentiment? Give us an overview.
Yeah, definitely good vibes in the room. As you might expect, a lot of the Congress people were kind of in and out. But I mean, as you said, right, Andrew Hones, Fred Thiel, all the rest of the mining, or a lot of the CEOs were there. A lot of the CEOs and government relations people, right? So it'd be like, there's Fred Thiel and there's the government relations person. Here's this person and their government relations person. So that made sense. I was surprised to see some people there, like Max Kaiser, right? He's in El Salvador. So I was like, is this a bigger deal than I thought?
Hopped on the PJ and showed up in DC and was ready to go.
Yeah, it was my first time seeing Jack Mallers, in like seeing him in person. So that was obviously great. Not to just read the news, but having bills in both houses, or the House and the Senate, both chambers being either introduced or reintroduced, and each of them having 6 co-sponsors. And there was some talk during the presentations about other conversations for additional co-sponsors, all of that's very bullish. I thought, along with, it just seems the theme that I picked up on was like, now's the time. Time is of the essence to get this through Congress, get it passed into law, not so that the US can necessarily buy Bitcoin at $80,000, but this is just the best time to do it if you think of now through the midterms, like now's the time to get momentum and get it done, not 9 months from now.
Yeah,
So,
there was this fear. There was this almost fear element, and it was a theme in Saylor's presentation. It was, I think it was how he ended his presentation was, what would you do if China or Russia purchased 1 million Bitcoin and controlled 20% of the network? I think that was how he ended the presentation, and it was this. It was a hammer, right? It was like, oh shit, that's an interesting, it's the posing the game theory question to insinuate people's brains to move. So, like what the general theme on, I mean, Vivek presented, right? Vivek Ramaswamy presented. What any other takeaways from the other presentations that you saw there?
I thought not to say the word Andrew Holmes 7 times fast, but I thought his presentation I was blown away, right? I think it was only 10 minutes long. The programming was so on point. Literally, if you see certain things on social media, right, like Andrew's presentation, you might think somebody clipped it. No, like that's the entire presentation. And
short and sweet, 10 minutes. What was it? 10 minutes.
Yeah, and there were a lot of presentations like that. So, to the extent that people want to go and watch several or all of the presentations, highly recommend it. It's the first time that Saylor, to my knowledge, brought the slide up of Bitcoin as a defense, kind of the what's the military aspect of it,
The
all
software,
of that.
like the software. Yeah.
Jason Lowry, yeah. And so like that, I don't think can be understated. That was interesting. And I was walking along with Saylor for a few minutes afterwards. I said, "What do you think about these bit bonds?" He goes, "It's a no-brainer. It's just a matter of whether the government would actually buy into it." So lots of things on the table, lots of things on the menu, just a matter of what we can get done in what amount of time.
Yeah, Saylor went all software in that
He
presentation.
did. Well,
that I saw him in.
he went all software first, and now we're going software. Yeah.
Mm-hmm.
And it's great. I love that he's coming out strong with saying, the U.S. should own 20% of Bitcoin, right? You should own 5 million Bitcoin, and that way, if they say you're crazy, we'll buy 1 million. If he comes out and you say you should own 1 million, and they say you're crazy, they buy 200,000, or they just keep their 200,000. It emphasized the size and scale of the power that you would have potentially in the market, and that compared with the bit bonds is a really fascinating idea. For those that are unaware of the bit bonds, the idea being issue U.S. government treasuries, but with a sliver of Bitcoin as collateral combined with it. So it's basically like a credit wrapped product that provides an incredibly liquid U.S. Treasury, position, but a Bitcoin position as well, at a lower potential interest rate, and with the ability to share Bitcoin upside to anybody to Americans that are buying the Bitcoin bonds, and no capital gains tax on any Bitcoin bonds that are purchased. So it's a good way for the U.S. government to generate revenue, good way for Americans to build savings, and you get this continued push into Bitcoin. It would be a fascinating concept to like throw on top of a strategic Bitcoin reserve, and now you're incentivizing your population to become prosperous by putting these things in place that are not terribly difficult to do and are like good for the entire U.S. population.
I mean, the country that does that just wins, right? Their demographic wins. All of their citizens win.
Yeah.
It's like the first thing that's actually like for the citizens that I've like heard.
Yeah, and even in an ethical sense, like the paranoid crypto anarchists would say that taxation is theft and whatnot. And if, maybe we can just have government representatives standing outside the grocery store next to the Girl Scouts selling cookies, and they can sell the bonds and raise money, fairly. That makes sense to me.
Yeah, there's no reason the lowest rate of return should be investing in government. By investing in the government, you should have some sort of incentive other than a shitty yield.
Right.
Yeah. I mean, you had Mike Belshi from BitGo up there talking about on a panel with a couple other guys talking about should the U.S. Use custodians or come up with a program to self-custody the Bitcoin. And, some of the answers were like, well, you should self-custody ultimately, but maybe start with custodians. And I mean, it was just stuff that I hadn't heard before. And my conspiracy theory, right? I have no idea, is like, and this is maybe a step too far, but it's like, if they're saying this stuff on stage and these are now the conversations, how long have they been talking about it behind closed doors, right?
Right.
So I just took all of it like, what? This is the first time I'm hearing about these considerations and how to buy Bitcoin without moving the market. And that's the one thing I tweeted, right? Like, the price moves by 1% for every $80 million bought, and all this stuff from like a market faking.
Is it true? I unfortunately don't believe that at all.
Yeah.
But I hope it's
maybe
true.
it's got to be some point in time thing, right? Like it's
yeah.
I mean, I would.
People throw that stuff out there. It's like crazy, like the 100x bull market multiplier from Bank of America a couple of years back.
Yeah. 50, 100, yeah, whatever it is. All I know, the other theme I'm seeing even in the comments right now is that I need to start a merch store with orange ties. Like that's whether it's Hermes, whether it's Walmart, Amazon, like I got to get that going. So it's on the list.
Discount code COTS.
COTS. KOTZ.
That's right.
That's right. The other thing I wanted to add on that is the cool part about Bitcoin is it is programmable as well. So this is something that Rob Hamilton at AnchorWatch is a big proponent of, is time locks. And the government, it could be if they, do end up buying Bitcoin for and holding it for a long period of time, there's significant incentive to lock it up. So not one party can go reverse it at, 2 years later. And there's the ability, you can lock it up for 8 years, 12 years, 24 years. And then you're incentivizing that, further development of the network and ecosystem, and preventing any one political party to change their mind or change their stance, really.
It's actually such a good point. Yeah, we didn't think about that. Like the assurance you get there is unlike any sort of monetary policy that's in place now in the United States, right? It can't be changed if you time lock the Bitcoin in time.
Yeah. Yeah. So, I mean, we're in a really unique point in life, right? A lot of people don't know this stuff is happening. And I think everybody that's watching it's got some sort of asymmetric information. I had this conversation with Richard Byworth earlier today, and he was just talking. He had conversations with some big capital, and they're contemplating whether or not they buy it $80,000 or wait until it potentially plummets to $62,000. And his commentary was, we're going to look back in August. We're going to go look back on this and say, this was asymmetric information, right? Like, if you would have told me that the U.S. has the largest economy in the world has a strategic Bitcoin reserve, and they're planning for budget neutral ways to purchase more Bitcoin in the future, I would think the price of Bitcoin is going higher. Not many people know this is happening.
And we're trading fucking 15% above last cycle's all-time highs. Like, it seems
15% above the last cycle's all-time highs, plus in an interest rate environment, but that Bitcoin has never seen before, right? So the Fed funds rate is 4.75 basis points. Last cycle peak was ZERP. There was zero interest rates. So your opportunity cost of capital was like, yeah,
It was
you're like
stagnant,
risk
right? It was
on, right? Like, so now we're in a risk off interest rate environment, or just kind of like a neutral interest rate environment. Everybody's trying to figure it out. And Bitcoin's still at 15% above last cycle all-time highs. So to your point, there's just a lot more capital coming into the scene here. Corporate adoption, everybody's got their foot on the gas, trying to move forward.
Yeah, and that comment that he made, I needed to hear it so bad, and I was so happy that Mason clipped it and posted it
Yeah.
because it
So
was
now
like,
you can go back to it and hear it multiple times.
yeah, exactly. Yeah, maybe I should just do that every day. My daily affirmation is just listen to that clip.
Exactly.
There's a bit of anxiety, when you have the euphoria of November and then you just ride it down. It is kind of, soul crushing.
Keeps you
And
up
then
at
for him to
night.
frame it that way, like, look, 6 months to a year from now, it's just gonna seem so obvious. And it's like, oh yeah, keep my head on straight.
Right. So, and to that point, I do want to talk about Strike a little bit. And I think the reason I want to shift gears in this direction to Strike is because I think conceptually what's happening right now with a strategic Bitcoin reserve and this news cycle that we're seeing, it really just kind of hit me this last week, the value of Strike as an asset for somebody's potential portfolio. And after seeing it trade for like a month now, you can start to see how it works in relation to MSTR and start to conceptualize the yield a little bit better. So, what I've realized is I think this product could be very valuable to somebody's portfolio. Well, let's just say you're 50 or 60 years old and you want to have long Bitcoin exposure. You've already got cold storage Bitcoin. Your alternatives are, I go invest in like Mag 7 stocks, which I think are overvalued, or I want to put some leverage into MicroStrategy, but I don't want like the downside volatility because I'm 60 and I want some upside, but also an income generating asset would be great. And you start to see the value of something like Strike, right? If you have $1 million held in Strike, and at today's price, you're getting a 9% interest on that $1 million. What is that? That's $90,000 that you're getting annually. That's $8,000 or $9,000 of revenue or just income monthly that somebody can live on, right? So if you've got if you want to get directionally long MicroStrategy call option exposure, you can have a less volatile product that's paying you income in the meantime, and you also have this kind of call option directionally long, perpetual call option on strategy exposure with the downside protection that if there is any bankruptcy, you're also in front of the line before any common stock shareholder. So you're really protecting yourself. And if you think that the strategy is going to be able to manage their leverage ratio through any potential future, given that their leverage ratio is so low, it's 20%, they could withstand a significant downturn. That's a really interesting product to buy and to have as a piece in your portfolio. So yeah, Tim just wrote in our private chat, when you're 60 and you don't want a vol of 60, that strike might be for you.
It might
keep you alive. Yeah. And I've that's another asset that I'm currently holding in my HSA, which is great because my HSA, I want to have income on my strategy, strategy shares. I want to be directionally long, but it's also my HSA, so it's like this beautiful tax advantaged account. So I don't necessarily want the downside. So it's an interesting place it's an interesting product when you start to think about tax advantaged accounts and your time horizon, what exposure you have, what combination of exposure you want, and then from the investor perspective, your downside is protected. So it's an interesting risk analysis. You guys have any thoughts? Like, are you guys trading it, or like, are you seeing anything on it?
It seems interesting to almost treat like cash. Like, my problem is when I want to take profits. Yeah, he is doing that, right?
Yeah.
Like if I want to take profits, but I don't want to sit in cash because it's a melting ice cube, Like Strike seems kind of like a no-brainer. If the market gods are listening to me, they'll hold the Tesla price down until we get our next pump, and then I'll have something to kind of like balance in and out of. But yeah, Strike seems like pretty useful for something like that as well.
Yeah,
And should we talk about Josh's idea about selling Strike ATM to buy back MSTR Class A shares?
over to Tim.
That's
This is the perfect. Okay, so let's set the stage. What was it? Monday, Saylor announced a $21 billion ATM on Strike. Like
Big
huge ATM, and like
awesome.
yeah,
Let's
it's
go.
massive. And a bunch of people, of course, the Bears come out and are like, how are they going to pay this 8% dividend on the Strike ATM? $21 billion. It's yeah,
1XM
they're definitely
NAV.
1XM navers, and they
Bears.
they don't read.
High profile people are 1XM
They
NAVers.
are.
Some very high profile people that we roll with. Apparently, are 1XM.
I know
Bears.
the one.
They're in our same circles. Won't be named.
Yeah.
Anywho,
So it's just really big news on the $21 billion ATM. The Strike offering is incredibly accretive, right? It's basically like it's selling the convertible debt basically at a significant premium. Basically 10 shares of Strike equals 1 share of Strategy at $1,000. So significantly more accretive than the convertible debt. But there is this interest component. The interest can be payable in Strategy shares or cash or some combination of the two. Additionally, I guess the ATM could effectively be used to raise capital and pay the dividend. From a general scale perspective, I think they've raised, what was it, 200 million, 500 million in the initial issuance? I think it was the 280 million, maybe it was 500 million. I don't remember. But the general scale and the size of the dividend right now is still incredibly low. And the fact that they've converted some of their historical convertible bonds into equity has already cleared up some of that capacity for paying the dividend into the future. But Tim had a very interesting conversation with Phong today. And I think it's probably worth teasing that a little bit.
Yeah, I mean, I don't want to give away everything because then no one's going to tune into the pod. But safe to say, quote unquote breaking news, Josh Mandel might be right again. I literally asked, shocker, Josh Mandel might be right about so many things. I asked Phong, hey, if you drop below, just hypothetically, an MNAV of 1, would buying the stock back, the MSTR stock back, be the better buy? And he said, we potentially would consider buying the stock back. We would not sell Bitcoin to do it, but we would, consider buying the stock back and taking on debt to do that. So lots of levers, lots of things that they can do at their discretion as long as it's accretive. So I thought that was super interesting.
Let's think about how crazy this is, right? And a
People
lot of
would
people
lose their minds.
A lot of people on the thread maybe haven't considered this yet, or maybe they didn't see it. I know, Josh's follower account is like quadrupled in the last month because of his prophecy.
He's also lighting up the keyboard like 24 hours a day.
Yeah, he is. That's true.
Yeah, he's
That's
always
true.
on posting.
He is. But this concept of Strategy buying the stock back, I think, is just a very interesting concept in the whole theory of like how the market works, right? So, for example, let's say Strategy trades down to a 0.95 MNAV or 0.9 MNAV. It's trading below its asset value. They could issue Strike ATMs to raise capital, right? We've got a 100% conversion, basically, like a really high conversion. You'd raise capital by issuing the preferred stock. You could buy back MSTR, the shares, which would theoretically increase the price of the stock and push the MNAV back up higher. And ultimately, that it's just this stick that Saylor or the strategy team could use to keep the market honest without trying to push the stock down too far, and then recognizing that, oh wait, they could actually buy the stock back and put me in a negative position. So it's an interesting tool to have in the toolkit that they could potentially use in buying the stock back.
And it's a signal, right? I think someone
Yeah.
mentioned that as well. It's a pretty impressive signal if MSTR were to buy back their own stock, saying, even if it's at a positive MNAV, we are confident that this is a valuable asset at this multiples MNAVs.
And at this point, I mean, just the chat in and of itself is worthy of that's enough entertainment. Let me just read 3 in a row.
Yeah.
Josh is my favorite time traveler. Big Daddy Josh and the Mandela effect.
Oh yeah, we gotta love it. We gotta love it. This community is really cool. I mean, the fact that there are there's 7,200 people. This is one of our I guess less popular streams, but the fact that there's 7,200 people here, it makes you feel a lot less crazy. Following along on all of this news, and it's so fascinating because all of this stuff this is one of the most complex financial markets. And it's evolving so fast, yet it just doesn't get the mainstream media attention that really stupid stuff does. It's like, it's just so strange.
Yeah, and so then if it does drive the MNAV up, then can they just? I mean, I guess kind of as a last ditch attempt, the little bit of ATM that they do in the common stock would be to just pay the dividends on strike, or can now with the 21 billion, can they sell converts to just pay their own interest dividends payments too? I guess it could go either way.
Yeah, they needed the demand for the converts, and if you're trading at a 1 MNAV, it'd probably be during a bear market where vol's flat. I don't imagine they do that, right? But as you're saying, if they bump the MNAV to 1.3 by buying back the stock, they could go out and issue the stock Class A to pay the dividend for the preferred, right? That's kind of like you need to get things kicking at that point.
Right.
If you needed like a jolt of keep this thing alive.
That's like the next FTX collapse scenario. I would say is when they maybe pull that.
Yeah, I mean, I think
they could do it for confidence, investor confidence. I think.
Yeah. Oh my God. Just think about the signal it is, right? Like Apple comes out and they say they're doing stock buybacks. What happens to the price? It rockets.
Oh yeah.
It rockets. You're like, holy shit, they're doing stock buybacks. I'm going to go buy the stock because there's going to be less stock available. It's just like supply and demand.
And that is Ryan's thing, right? Ryan has a really good chart of, I think he posted it again, but he's got a really good chart of like the Bitcoin digital gold rush till 2035, and then how you can continue accreting BTC per share by doing stock buybacks after they've acquired, cash flow companies and stuff. And that long-term thinking, I think, is really valuable.
Yeah.
If they somehow figure out how to generate cash flow with their Bitcoin or by borrowing against their Bitcoin and buying cash flow producing assets, then stock buybacks would just be an insane lever to pump when Bitcoin's quite expensive.
Yeah.
And only maybe the Bitcoin CAGR stalled out at 20. As Saylor says, a stock buyback may be more accretive than just buying a 20 CAGR asset.
Right. Mm-hmm. Because it could allow them to buy more of the 20 CAGR asset.
Yeah.
It's like, oh God, how deep does this thing go? It's a black hole. Like this whole thing's a black hole. It just eats itself. It eats everything around it. It eats itself. And then like the whole, like maybe the world's better. Man, I can't help but thinking how, strategy is going to eat so many financial markets, and before the old guard even knows what's going on. And it's just
I'm looking forward to the day to see how kind of the strategy plays out. Like once the BTC yield is died down, and to see how the strategy evolves over the next 2, 3, 4 years, or how they evolve their strategy for BTC yield. I don't know. I'm just so excited to see what their next move is.
Yeah. I think another thing that might be worth talking about is I had this conversation with Richard Bauer today on the MSTR True North YouTube channel. Go take a watch if you haven't already. Richard's a wealth of knowledge. He was a past convertible bond ARB trader. He runs the liquidity team at Seize Capital, which is a Swiss-based kind of hedge fund deal. And anyway, in this conversation, we get talking about the convertible bond buyers and what happened. We did a historical review of what happened in the last 4 months. When the price of the stock ran up to $500, like what was in the mind of the convertible arb traders, and then what happened when the price came down, and if there's still significant market available for that. And so what happened when the price of the stock ran up to $500, the delta of the underlying convertible debt was basically trading it as equity, right? Like the debt itself was basically trading as equity, and there was no juice left to squeeze out of it. Like there was nothing left to arb because it was so far in the money that there was no juice left to squeeze, and the market was just yelling at them like, "Hey, we want more of this. We want more arb, like potential. Like give us more convertible debt." And that's when they came out with the largest convertible debt issuance that they've released in November, kind of at the peak. Vol was 60 or 70. They issued $3 billion of convertible debt. And then we saw the price kind of come back down, which is actually what the convertible debt market wants, is because as the price of the stock comes back down, there's more arb opportunity, in and out, back and forth, when the delta is lower. But
and that one's so interesting to me. The way I understand it for this delta gamma arb trade situation is, so when the stock price is higher, the delta is higher, right? And so if it's an 80 delta, they're hedging out. Let's say they have an 80 delta convert note. They hedge out, like, let's say it's the same as like an option, right? They're short 80 shares. So they're delta neutral, right? So they're 80 delta, they're short 80 shares. The price of the stock goes down. The delta is now 60. So to be neutral, they only have to be short 60 shares, right?
Yeah.
So when the stock price goes down, they were short 80 shares here. Stock price goes down. Now they only need to be short 60 shares. So they sell 20 shares, or they buy back 20 shares at a profit, right? They were short 80, the price goes down.
Yes.
Now they're only short 60 shares. That's a profit. And that's where the profit comes from. Again, it's not because the price goes up and they're long the delta or long the convert. No, they made money because they were short. They were essentially bought shorts when it was high and then sold shorts when it was low. And they're able to do that in a fashion that is kind of risk off for them because they're holding this convertible note. Without the convertible note, they'd be trying to time the market. With the convertible note, that's able to function as this fulcrum. Yeah, this fulcrum to kind of allow them to capture the downside. And so they only make money on the downside. That's the other thing people need to remember. Like when that convertible note was issued right at the peak there, I think it was like 480 a share. And then we nuked to like 417 that afternoon. Those guys made probably whatever it is, 10, 20%. The majority of their gains were made in a single day for those convertible arb traders, right?
Yeah. And a lot of, there's been a lot of bearish sentiment with people that have no idea what the hell's going on here, saying that there's going to be no more demand for these zero interest bonds. They think it's just like straight debt. It's not straight debt. Like there's games going on here because this is the most liquid asset in the entire market, right? It's one of the most liquid assets in the entire market. The top 10 publicly traded equity since October 30th, because they've bought so much more Bitcoin. There's so much more liquidity, and there's all these games going on back and forth. But eventually, that trade kind of dries up when you get
when you get deep in the money.
When you're
deep in the money, the game's over, and when you're far out of the money, there's no delta change, right? The gamma is very low. In honor of grain of salt, full gamma, right? The gamma is very low when you're far below the strike or the conversion price, and the gamma is very low when you're high above the conversion price. The gamma is the change of that delta, which all happens right around that conversion price. And so I think so right now, strategy is 2 convertible bonds. This made me think of let's look at the convertible debt as it stands now. What are some of the conversion prices that are kind of near where we are? So everything's deep in the money except for the 2030 B bond for 321 strike. Excuse me. And the 2029 convert with a 433 conversion price. So I think you're going to see a lot of activity around those two prices as we move, both above and below them in the future.
Right. It's almost
Yeah,
you could think of it as like they're almost targets. Like we're going to see
Yeah.
trading around those targets probably.
Yeah, we'll rocket as we go up. The delta will increase because there'll be a high period of gamma for these convertible ARB guys. The delta will increase and they will be buying the stock as we move through them, right? Similarly, if we fall back down below them, they will be selling the stock and capturing those gains. So there's just a lot of movement between those two points.
Mm-hmm. So
yeah, when Richard described what you were just exactly the same thing that you just described, Dan, I literally screenshotted it because I was like, this, well, to me, it was important as an option trader. If you just want to own shares and you want to do, go to sleep like Rip Van Winkle and wake up 20 years from now and check your portfolio, you could ignore all of that stuff. But when you're an option buyer and you're on the clock, I was like, holy shit, you have to think like these ARB traders, because in November when the implied vol was through the frickin' roof, you had to take that signal, and just like the bond traders were shorting like mad and waiting for the correction, you have to do that as a call buyer as well, I think.
Yeah.
So listening to that interview with Richard, I think is instructional for anyone who's dealing with options, just to get yourself in that buy low, sell high mentality.
Yeah, because they're bigger than you, right?
Yeah.
They're way bigger than you, and they have way more control of what's going on here than any retail investor that's buying options, right? Like,
yeah,
like the options market. If you're a retail investor, it's a casino. If now you can get a little bit more information and a little bit of an edge if you understand the architecture and the structure of the players in the game and like what they care about, what they're looking at, and how their trade is designed, right?
Yeah, I love conspiracy theories. And as soon as he said, when the price was that high and it was just trading like equity, and they wanted the price to go down, and I'm like, the price did fucking go down.
Yeah.
But so I'm like, well, did they make it go down? But just it's normal market functions. You know what I mean? You get a 4x, you should expect a 50% correction. But I don't necessarily. I'm not saying that they manipulated the market, but they've been doing this forever, and that's just how it is.
Well,
the price goes up.
I think they're sophisticated. Like that short report came out the day the converts were issued. Everyone knew the stock was overbought. Looked at the implied vol. I talked to this guy Peter Visano. He sells the pies a lot. And
MSTR pies.
the MSTR pie guy.
The MSTR pies. We talk a lot, and he used to be a bond trader. I think he knows Josh from back in the day. He used to be a bond trader at the Chicago Mercantile Exchange. He's a gangster. He's a cowboy. But he's got really good insight at how these boys play these games. Like everything we think, it's like, oh, it's probably not coordinated. Like they know what they're doing, and they will smash that stock. They will obliterate the stock and make all their profits in one day. And they will do it with their buddies and then make sure it happens. So like, you can't be naive here and think like the big boys aren't out to fucking smash the retail.
Yeah, I mean, and they raised what, $17 billion, the $20 billion in 40 days, right? So now you got $20 billion worth of new equity on the market. That's just liquidity, which if you're an ARB trader, you want liquidity. You don't want it to go squeezy high, because then you have nothing to ARB. You want just the general liquidity, which is why I think, again, why we've seen the volume be so high, right? It's a top 10 publicly traded equity. I keep coming back to this because it's just a strange phenomenon to me. How is this company the 140th largest company in the world, but it's the 10th largest publicly traded company by volume? There's something there. What is it? I think it's all of this additional. It's just vol. It's vol trading from all of these other players in the market.
That's the other thing, is you can actually do this too, and I've been thinking about this a lot too. I've never done it, but you could buy a leap, like an at the money leap, and short it and update your shorts constantly based on the delta. So we should run that as an experiment, guys. We should run our own convert ARB simulation where we buy a leap and then we short the stock in our brokerage account, and we see how much we can make before, like, we buy a really far out option so we don't get a lot of theta decay. and we're just like, oh, let's just see for ourselves how it behaves. I think it'd be cool experiment.
That would be cool. At the very least, it reminded me that even if you have leaps, like we had a pump in March and we had a pump in November, so you had 2 bites at the apple. You had 2 chances to take profits on that leaps. If you missed March, you had to do November. And so people that are buying leaps into 2026, are you going to get 1 or 2 chances this year?
Yeah,
And
because that there's going to be slam pressure on the other side of it.
Exactly.
That is so true, Soleil.
Yeah, so my big mistake was that I had these I had December 2025s and they were still a year out, right? But I could have double up on leaps that I had for 30 days. But since my philosophy was like, oh, these are leaps, I can just hold these for another year. Now I watch them go from a 2x profit to down, down 50%. And so, just because leaps give you enough time to be right, it doesn't give you forever. So
Right.
I think that was kind of a learning opportunity. And these bond traders, that's just their way of life. You know what I mean? It's comes second nature to them. And I think if we take a lesson from that, it can help people who own calls to maybe not miss those opportunities.
Well, we are so much more informed than we were back then. It's funny. I went back to my first conversation with Richard. It was on November 20th. So the next day, the stock went to 540 or 560 or whatever it went to, and then started slamming back down. And it's in retrospect, like in our conversation last November, he said, when the stock is this high, the thing that they want the most is for the stock to go crash the other direction.
Mm-hmm.
It's like in retrospect, it should have been like, holy shit, like scrape some cream off the top. But you hindsight's 2020.
I think we can be forgiven for. Oh, go ahead, Dan.
I was responding to Josh's comment. We won't do that, Josh.
Don't buy FAR OTM leaves.
Thank you, though.
Yeah, I think we can be forgiven for some of that because,
He's
Bitcoin's
totally
never
right.
existed.
Right.
What did he say?
He
What's
said
that, Dan?
the stock's not going down, so you'll just get wrecked. Or that's my translation.
We just ran the experiment. He ran it in his mind and reported back the results.
You will lose money.
Yeah, no, I think we can be forgiven for some of those things because Bitcoin has never existed before. So the world is experiencing that for the first time. And then everything that strategy does is kind of like setting a record for a first time because it's the first time that a company has ever bought Bitcoin and used it as their treasury reserve. So every time they issue a bond, it's the first time a company that's on a Bitcoin standard has ever issued a bond. And then when they issued their preferred stock, it's the first time a company has ever done that. Every single thing that they do for the next 10 years is going to be the first time it's ever been done.
Yeah.
And so it's going to take a little while for people to understand what the frick is happening.
Well, I mean, look at this. Like strategy represents 30% of the convertible bond market right now, right? That's just a crazy high.
Really?
It's 30.
It's today's volume or this year's volume, right?
Oh, it's by
new converts issued this year. So they're 30% of all new converts issued this year, which is actually a relief to me. Thank God.
Yeah.
Because 30% of the total market would be like,
Soleil, to your
Yes,
point about this being the first time, literally today, Fong was like, yeah, when we were talking at first to the accountants and the attorneys about strike, they were like, you're not allowed to do that. You can't do that.
You can't do a $21 billion ATM offering.
Yeah,
really?
well,
just strike in general.
Yeah, just strike in general. And Fong's like, well, it just emboldened Mike and I to be like, no, we're doing it, and this is just the beginning.
Yeah.
Wow.
Like this is just one of the first things we're doing.
Right.
Yeah, they've got like ultimate freedom of design here, which is just a fascinating place to be. But I mean, Soleil, you're so right? Like Bitcoin has never existed before. This equity has never existed before. How many people on this call? There's 8,500 people on this call. How many people on this call knew what a convertible bond was 12 months ago?
No.
Right. Clue. Like I wasn't tracking convertible bond market 12 months ago. Did I care? Like did I even like nobody really knew how that market really existed unless you were like really paying close attention to like startups and how they're raising capital, or like
It's so interesting, and it's so fun. Go ahead. Sorry, I interrupted.
Yeah, no, that's it. Go ahead.
Yeah, no, I'm just saying it's so funny because like most people when they try to value equities or look at this stuff, they think about selling things, selling products. That's how they understand business and equities and companies. Or in here, it has nothing to do with selling anything. You're selling an intangible. You're selling volatility. What the hell does that mean? It's all about these market dynamics, which people don't even focus on when they think about companies. The typical person just thinks about revenue, EBITDA,
Earnings,
this, that.
Oh, they had such a good earnings.
Right.
Oh yeah, the TradFi guys that I follow, their engagement posts will be like, which Mag 7 are you buying? And I'm like, they're so freaking uninteresting. I could not give a shit less about any of that stuff. Now, I mean, I know even Saylor was like, if he was putting his portfolio together or like recommending it, if he was a portfolio, advisor or whatever, he's like, Bitcoin, grab some Mag 7 or whatever. But it's completely uninteresting to me. Like I don't spend 2 seconds of my entire day giving half a crap about the Mag 7. If they buy Bitcoin, I'll pay attention. Until then, I have no time for it.
I mean, the Tesla thing's rough. Like, I feel really bad.
That's brutal.
They've been flat for 5 years where we're sitting right now. That is rough.
Yeah, but I mean, it was like it's a very similar trade to this, right? Like you're going to see peaks and troughs. Like
totally.
Also engineering volatility, right? Like that is a volatility. That is a volatile stock.
Yeah, it's a volatile.
And they probably got the biggest Trump pump of any company just because of Elon's association with the winner of the presidential election. And,
it would have been a tough sell. I think about if I had been in that position, I would not have been selling at the pump. So yeah, I guess
same.
You have to wait it out.
Well, Elon's really interesting, right? Like if Elon were to run for president, it'd probably be 50-50 on the popular vote, right? Like half the world hates him.
Mm-hmm.
That's the reality. Half the world hates him. Half the world thinks he's the best thing since sliced bread. We got Ryan. The Tesla trade permanently ended. He's been bearish. He's been so bearish on Tesla forever. Also good to see Ryan in the chat.
Here's the ears were burning when somebody said Tesla.
It's like Tesla is over. Yeah. Here's the reality. Tesla has been done since 2021. So funny. Oh man. Okay. Yeah, so much going on here. A lot of different products hitting the market. Okay, Soleil, should we talk about MSTY? What's going on there?
I don't want to.
Okay.
No, I'm just kidding.
Yeah.
No, MSTY is down like 60 grand. So let's see, we started with 212 grand. So what is that? 30, they're down like 30%. And I'm down an extra 27 on top of that. So, with strategy just getting hammered, both of our accounts are getting just waxed. And I'm getting waxed harder because I decided that I was going to take on leverage like right from the start. So, my positions are getting hammered, but I basically just need like 350, I think, to get even Stevens, except they're about to pay dividends. Mm-hmm. Is it this week or next week? So even if I claw my way back to even Stevens, I'm going to be like down another 10, 15 grand again. So it is an uphill battle trying to fight those dividends, but we'll see. Yeah. As long as we don't trade sideways for the next 6 months, I think I'll be fine.
Yeah, an MSTY dividend was what, like a $1.45 a share? I think it gets paid in a couple of weeks, something like that.
Yeah. So my MSTY account will get like, I think I have like 7,000 or 8,000 shares in there. So I signed up for the dividend reinvestment, and that account will automatically buy more shares with the dividend. It's in an IRA, so I don't have to worry about taxes on the dividend. And it's generating cash, but if the underlying is down, it's not like you would think, okay, their covered calls should all print, but it's not like that. Dividend seems kind of low if every single one of their short positions should have printed money. Right. So I don't know.
Yeah, it's. I'm still trying to figure it out. And there's a new MSTY community in the X world. I mean, there's so many other things going on to try to pay attention to right now, but there's an MSTY community out there where they're doing a bunch of analysis on what's going on. There's one of my thoughts and concerns is like if there is NAV erosion with MSTY, has that been something you've thought about or contemplated, Soleil? Have you explored that?
I think a lot of their covered call, the yield max covered call things do have some NAV erosion. I think that's fairly common. I know some of the TradFi people I follow, they shit talk yield max quite a bit. I think because of that reason, and you know, just
Josh
just on principle, paying them. What does he say?
If you believe we're on the precipice of a major rally, you better be switching out.
Yeah,
none of this is financial advice. Josh is crazy, but he's also a prophet.
Yeah, no, it is true. I mean, even in there,
Dan, you're on mute. Dan, you're on mute. It was something good though. It was.
Yeah, I know it looked good.
Yeah.
I was just saying, MSTY 100% downside correlation with a dividend that's short-term taxed.
Mm-hmm.
I mean, that's what you get.
And
unless you're in a tax advantage account.
What?
Unless you're in a tax advantage account.
Right, unless you're in a tax advantage account.
And you got to pay them a management fee for the privilege.
Right.
Of trading in that manner for you.
Account, I would assume, sorry, I'm such a bear. Like, I think it's awesome for like, but you'd have to compare it against something else. If you compare it against MSTR, if you're in a tax advantage account, I'd assume you're going to hold for the next 50 years. And my bet is that MSTR outperforms MSTY dividends reinvested over the next 50 years. I guess that's not a super fair bet to make, but like the arbitrage, the volatility arbitrage would have to be so good that an MSTR would have to underperform so significantly. I mean, it's just a weird bet. Like, I think MSTY just fundamentally, principally, is kind of like a weird bet. You have to be kind of bearish MSTR, the equity, right?
So, Dan, this is an interesting point that you bring up, and I think it's especially poignant because you're younger. And if you were like 50 or 60 and you wanted income and you wanted to be directionally long and wanted income, maybe it's a tax advantage account or maybe it's some other type of account. It's an interesting product. And name another product out there where you don't have to do anything. Right? Like
you don't have to do anything.
You don't have to do anything. You don't have to learn about covered calls. They just do it for you. Now,
well, they've got that FIRE calculator where they say, okay, give us your assumptions for how much Bitcoin's going to go up forever and how much money do you need. And so then it gives you how much Bitcoin do you need to the point where you can just sell 0.001 Bitcoin per month until you die. And then, it should last you.
Yeah.
And you could probably do the same thing with strategy.
Yeah. Absolutely.
I get that doesn't feel the same though. I do have sympathy there. Getting the income feels really good.
It does exactly.
I totally get that. Taking a little bit off feels like you're just poor every time. I totally get it.
Especially if you're taking shares off in a downturn. Right? Like let's say you've got a portfolio that generates $6,000 of monthly income, right? And you're like cooking $6,000 a monthly income, strategy's cooking. We're like, fuck yeah, right? Everything's gravy. Boom, issues a bunch of convertible debt. Boom, stock slams 60%. You still, let's say you have a mortgage and you still have this $6,000 income need. All of a sudden you're like, wait a minute, I don't want to sell. I'm selling, twice the amount of strategy shares to get that $6,000 than I did previously. So what's my longevity if strategy doesn't recover here? Like, how much longer can I do this if strategy doesn't recover here? And that's where that equation, like the FIRE equation, really comes into play. Is like, really, how much of your portfolio do you need to be peeling off at any one time to account for the volatility of the downside? So like a lot of these, financial independence, retire early people use this like 3.5% equation for like an S&P 500 portfolio, where if you can live off 3.5% of your portfolio, there's like a 99.6% chance that you don't run out of money when you back test it over historical portfolio volatility.
Okay.
Completely different equation when you're trading a 60 vol asset. completely
Right.
completely
Mhm.
different equation, right? Like what is your risk profile look like? And you're not 100% long MSTR, right? So if there's something that generates income in the meantime, I'm not saying MSTY is the best product. I'm not necessarily advocating for MSTY as a product. I hold it in my HSA and it's great because I go get massages and chiropractic and I'm balling. Like it's perfect for me. Um, but so it's just when you think about the world of portfolio design, right? Like the next decade is going to be hundreds of thousands of people rethinking their entire portfolio design, recognizing that they're pro Bitcoin and that they just don't want to hold anything else, right? They want to hold Bitcoin related equities because that's like what they believe in for the next 20, 30 years. And they're going to be wondering, how do I design my portfolio to be long Bitcoin, manage downside volatility, manage my risk, and I'm going to survive for another 30 years and I want some left over at the end. That's what everybody's going to be solving for. So
Yeah.
it's a fascinating product, right? Like you can't ignore it. There's nothing else out there in the market like it right now, and which is a huge opportunity for the few for other companies to come out and generate new products.
Yeah,
Jeff,
and I know some of the hardcore Bitcoiners got into strategy to like, okay, I'm going to wait for strategy to go up and I'm going to use it to buy more Bitcoin. And there's some covered call traders that do the same as well. They just plow all their premiums into Bitcoin. But you can use the Kelly Criterion formula as kind of like a rebalancing go by, really. And let's just say you have 50-50, just to make the math easy. You got 100,000 in strategy, you got $100,000 worth of Bitcoin. If Bitcoin goes up 50% and strategy goes up twice that, now the strategy is worth 200,000 and the Bitcoin's worth 150. So then you just rebalance it to 50-50 again. You sell some of your strategy, you go into Bitcoin, and then, if the bear market comes along and strategy goes down, whatever percent, and Bitcoin doesn't go down as much as strategy goes down because the strategy is leveraged, then you just rebalance back and forth. That's not a minimalist thing. So people who are retired may not want to deal with that. If you don't want to deal with covered calls, you probably don't want to deal with that shit too. But maybe fund managers will start doing things like that, right? That's the way that it used to be with the 60-40 equities to bonds, right? 60-40 portfolio, you would just rebalance.
Right.
So, but I think Jeff Park said the new 60-40 is going to be Strike.
Yeah.
And
yes, was it
Bitcoin?
60 Strike, 40 Bitcoin, or other way around?
No,
60
I
Bitcoin?
think,
Yeah,
I think
one
it's
of those two.
1x MNAV, MSTR, and meme coins.
He's 50% fart coin, 80%.
Love you, Jeff. Excited to see you next month.
Yeah.
Somebody said that isn't the whole point here to acquire more BTC, right? These are all tools to do that. I mean,
Is it? That's something we should talk about too. Is the point of MSTR to trade it to get more Bitcoin, or is it to own the equity? And I think if you ask someone like Josh, he may have a different response to someone like Jeff, whose response would be, well, the goal is to own the equity, right? So I think that's another really interesting question.
Well, it also kind of depends on the where you're at in the utility ecosphere of Bitcoin and like how you want to live your life. Like, do you ultimately, like, if you need to put food on your table or like live, you would be utilizing your Bitcoin by selling it at some point in the future, potentially, unless there's other utility options like lending products or other things that help you monetize your potential Bitcoin holdings. So I guess it just depends on, like, are you going to work forever? If you do work forever, then maybe you have fiat income coming in forever, and that's not an issue. But I think a lot of people that are holding Bitcoin and Bitcoin proxies are thinking about retiring their entire bloodline. But like, what does retiring your entire bloodline look like? Does that do you do what interests you? Like, do you still do some sort of productive thing for humanity? Are you still working in some capacity? Are you working for Bitcoin? Are you working for fiat dollars? It gets really hypothetical, and you can get really deep down this rabbit hole really quickly. I've been arguing with Checkmatey about this as well. He thinks everything trends to 1x MNAV. But that gets really.
I mean, but let's say Bitcoin's a hurdle rate. I was thinking about this a bit, and it's not a fully fleshed out thought, but let's say Bitcoin's a hurdle rate, and you've got it's 20%, settles out at a 20% K or 15% K or whatever in a bazillion years. Okay, so what? There will be corporations and companies and entities and other opportunities that will return more on that capital. So wouldn't that in itself lend itself to people taking risk with that Bitcoin? And investment and returns.
Yes.
Like,
Bitcoin yield.
And which is yield, right?
Yield.
Fundamentally yield.
Bitcoin yield.
Because an investment is US dollar yield, right? So I don't know. That's
yeah, but some of those people seeking yield are going to get wrecked because it's
risk. That's the essence of risk, right?
Yeah.
And most people, when they make an investment, they get wrecked. A lot of people, when they make an investment, get wrecked in terms of US dollars.
That was one of the big arguments that Saylor had with Safe the last time they talked. But I think I came down on Safe's side. I think that people that are sitting on a pile of capital in the form of Bitcoin are going to be willing to part with it, but for equity stakes, right? If you want to form a new company, you got a new product, you got a new service, I don't want you to pay me back in fiat. And I think it's kind of unreasonable to expect someone to pay you back more Bitcoin, like interest on Bitcoin paid in Bitcoin.
No.
I don't understand how that would ever happen. And in a Bitcoinized world, people are going to want Bitcoin. They're not going to want cash.
Bitcoin yield. Yeah, fiat yield out the window. Nobody's going to put their Bitcoin at risk for fiat yield. That's just not going to happen.
Yeah. So I'll loan you my Bitcoin, but I want 10% equity in the company. You know what I mean? I want that. I don't want a monthly payment of,
I disagree though.
Yield, interest.
That would say there's not Bitcoin yield, because that's the only reason you'd part with that Bitcoin for equity stake is if you believed it was going to beat the hurdle rate of the Bitcoin in terms of its accretion in purchasing power, even if not denominated in US dollars, right? You can still denominate purchasing power in the amount of shit you can buy with that Bitcoin. So I think effectively you're taking a risk for more value beyond that of which your BTC is appreciating at. But I don't know. I guess it's not yield.
Say it, Tim. You just wrote it in the chat.
Sing it with me. Bitcoin is the hurdle rate.
Bitcoin's the hurdle rate. Yeah, Bitcoin is the hurdle rate. And if you're going to be putting Bitcoin at risk, you need to be earning Bitcoin yield. And there needs to be a probability of Bitcoin yield greater than 0. And again, I had this conversation with Richard Byworth today. They just launched a fund. They just raised $200 million on this Bitcoin Alpha fund where they're earning Bitcoin denominated yield. And it's the Bitcoin denominated yield has like a two vol. And it's a fund of funds strategy. So they're taking this capital and they're basically investing the Bitcoin into these separate hedge funds that are running different vol arb strategies, using the Bitcoin as collateral or in different ways, to generate Bitcoin yield back to this ultimate fund. But I think they're generating like 8% Bitcoin yield, something like that annually.
I listened to that. That was super interesting.
Which is just fascinating. When you zoom out and you just take you look at Bitcoin yield in general, you look at MSTR's Bitcoin yield, you look at Metaplanet's Bitcoin yield, some of these other companies, Bitcoin yield is incredibly hard. Like if you're to do it on your own, if you hold Bitcoin, it's incredibly hard to do it on your own. You're probably taking outsized risk relative to the rest of the market. Or like companies like Strategy taking Bitcoin yield is a completely different equation than you trying to go generate a 70% Bitcoin yield. As a retail investor, you're going to be taking significantly more risk than a company like Strategy is taking, just given their general corporate leverage and their ability to use their Bitcoin as collateral in marketplaces that you don't have access to tap, like the convertible debt marketplace, preferred stock marketplace, etc. So yeah, it's interesting. It's really fascinating. And I mean, like it's going to happen in the insurance market too. And this is something I'm fascinated about. I'm going to try to meme it into reality. Like the Bitcoiners are going to eat the insurance market, and it's going to happen from the end of the tail to the front. Basically, Bitcoin has it's easy. People that hold Bitcoin have the ability to price tail risk better than the rest of the market that's pricing in the tail risk in fiat. Because tail risk in fiat has multiple components. You've got the inflation component and the debasement component. And debasement, you don't know what it is. And if you have an asset that is the vacuum on the other side of that trade, you can price tail risk better than anybody else. So my thesis is there's going to be Bitcoin yield opportunities in the insurance marketplace, pricing tail risk and eating it from the tail to the front. And I think we're going to see that in the next 4 to 8 years. And there's going to be a possibility to do that before the old guard even notices what's going on. It's crazy.
Yeah, absolutely.
Okay, what else we got? We've got I think that's kind of it. I mean, there's so much positive news going on, right? The OCC ability for banks to custody Bitcoin. You've got all of these new products hitting the market. I mean, it's an exciting time to be interested in what's going on in the Bitcoin market. And we've got Bitcoin at 84K, which
84K.
Yeah.
What's the value add of the Bitcoin Corporations ETF? Like, you can buy all the stuff yourself.
Oh, this is an interesting. Yeah, let's talk about it.
But they're going to be rebalancing it and adding new ones in when they hit 1,000 Bitcoin. So, like, yeah, I guess you don't want to go buy 12 things by yourself and rebalance it quarterly. If you can have somebody do it for you, and it's better risk adjusted because the max cap is like MSTR is at what?
Yeah.
Max is 20% weighting and all that kind of stuff. I guess makes sense.
Right. I mean, let's say you've got somebody coming to the scene from the TradFi world that is interested in, investing in Bitcoin equities, and you tell them like, hey, look, strategy is the best thing since sliced bread. They've got, 10x more Bitcoin than anybody else. And they just don't get it, which happens. There's a new product. You could take a diversified perspective on the Bitcoin, leverage Bitcoin equity market and purchase a product that's now got the diversified exposure to all these companies that are adopting this leveraged Bitcoin strategy, which is really fascinating. And the part that Jeff Park talks about, which is an interesting component too, is like now you have a non-correlated Bitcoin equity ETF that's also trading in the market. So now you have a different volatility structure that is going to move differently than Bitcoin. It's going to move differently than strategy. It's going to be moving different than all of the other underlying equities, and it may have different volatility metrics. So there's going to be just a new product entering the scene with different characteristics than some of the other products that exist currently. So yeah, it will be interesting to see how it trades. Because you've got some leveraged Bitcoin companies that they've got significantly higher Bitcoin yields than the rest of the market, right? Like Metaplanet is just absolutely blowing things out of the water, and they're just taking advantage of the Japanese market. But there's also exposure to different jurisdictions, right? I think there's like Hong Kong Bitcoin equities. I think there's European Bitcoin equities. It's stuff that I wouldn't necessarily trade on my own as well. So you're getting access to these different things via just one consolidated vehicle, and you don't even have to pay attention to it, which is nice for a lot of people that have other things to do, like pay attention to the market. Right. So, I mean, another thing, there's the convertible, there's a Bitcoin backed convertible bond ETF that's coming to the market here shortly. It's via Rex funds. And there's some concern about the tax implications of that convertible bond ETF. So I think there's a double taxation issue with that convertible bond ETF. So before we'll talk about it more, but it'll be important to read the fine print on how the convertible bond ETF is taxed, because I think it's both taxed on the front end and taxed on the back end, which is just an incredibly inefficient structure for an ETF like that. So, there are a bunch of shiny new toys hitting the market, and we're going to see, a dozen more in 2025 where new capital is, investing into these different products in different ways, and the market is just going to take a lot of time to digest those things. So, Nadia, other things to do. Yeah, not like we have other things to do. So anyway, I think that's all I've got. We've got 10,715 viewers, and we had some haters in the chat, so gotta love it.
We just had the one guy who's saying Checkmate, he was right about one MNAV. I think it's a good one, right? Because whatever, we don't need to get into it.
Yeah, it's philosophical, right? Like it's totally philosophical, and it's yeah, we don't need to get into it.
I think it's right if your business sucks. If your product is garbage and there's no value in it, then your value is your Bitcoin holdings plus how much you upgrade the world. If your products and services don't upgrade the world, no one is going to give you their Bitcoin for your services. And so you just fall to 1x MNAV. But if you have a product that people want and benefits their life, then they're going to be willing to hand over their money to you. And now your company can be valued at Bitcoin plus whatever your, profits you're generating.
Yeah. I mean, it's interesting. You start to think about what does a Bitcoin denominated equity system look like, right? Is a full, does the equity market exist in a Bitcoin denominated world? Are there other things that hold value? Do homes hold value? What is the measuring stick, and how is the measuring stick used? Does fiat still exist? Right? It's going to be complicated while there's still a hybrid system, and there's going to be a hybrid system for the foreseeable future, right? So it's really difficult to contemplate, and you start to compare, right? How do you compare any equity in the existing equity market, right? A lot of these Bitcoiners, they don't hold other equities, or they haven't understood other equities, or see other equities trade. How do you compare anything in the market? There's only one comparable metric, and it's market cap. Right. So how do you compare strategy to, JP Morgan or NVIDIA, right? I think strategy is more valuable than all of those companies, but it's just not trading there yet because all of those other companies don't have Bitcoin. So what's the measuring stick, right? It's tricky. That's where
Owen and Muck just said a really good thing. Right now, volatility is the product. Later on, however, they monetize collateral, and it's when does the market price in that growth or that shift? And maybe it's in 3 years or 5 years or 2 years. But
yeah, I mean, we're in the gold rush period, right? From now to 2032, when there's 1% of the Bitcoin left to be mined over the next 100 years. It's a gold rush. Get as much Bitcoin as humanly possible. Monetize volatility. Offer all the products to the market, manage your leverage ratio, don't get wrecked, right? It's just get as much Bitcoin as possible, don't get wrecked in the next decade. That's the goal. And then from there, it's okay, now you have more of the best collateral on the planet than anybody else, right? And how can you monetize the collateral in different marketplaces? And the funny thing is, right, when we talk about them selling volatility, they're already monetizing their collateral. And that's something that I don't think that's clicked for a lot of people yet. The collateral is the corporate balance sheet. And the corporate balance sheet is a representation of the Bitcoin that they hold on the balance sheet, right? So they're not necessarily using the Bitcoin as collateral per se. It's transformed and shrouded by the corporate balance sheet. So their position in the capital structure is what the collateral is, right? It's the protection by the position in the capital structure. So let's say 10 years from now, the price of Bitcoin goes to $1 million, right? Now you've got a company that's sitting on, what is that, $500 billion of collateral, assuming they didn't raise any more debt today, right? You've got a company that's sitting on $500 billion and $8 billion of debt. Yeah, you're the strongest financial company in the entire market. You eat everything. You eat companies, right? You eat companies, you eat markets, and you're leveraging that collateral in different ways, right? So that's going to be an exciting future, and that's why this is a one-way trade for me. I hold Bitcoin in cold storage, like that is my number one position. But like this is the most fascinating story in all of finance, because you've got a corporation that's actually monetizing their Bitcoin as collateral and has potential to be the strongest financial company the world has ever seen. It's a great story.
Yeah, some people have said that Strategy should even sell off their business intelligence software, and maybe for the next 20 years, volatility is the product. But I'm so excited to see MSTR World, because I want to see their other product. I think it's the only thing that matters. Like, if that's their only product in 20 years, once maybe Bitcoin isn't the product anymore, then that is the product. And so I'm kind of excited to see it. But the thing is, when they have more Bitcoin than anyone else, they can do whatever the hell they want to do.
Yeah, you can do anything.
So yeah, in 20 years, whatever the world needs,
and it's sovereign
upgraded,
power, right? It's like sovereign. It's sovereign power.
right? So whatever the opportunities are, they're going to be best positioned to do whatever the fuck they want to do.
Yeah.
So it'll be the BI software, and it'll be the best BI software in the entire world in 20 years, or they'll pivot to something else, and that'll be the best there is. So I'm not really worried.
This Matt guy's funny. Is just back to the NAV of one. It's like, dude, there's so many things in the market. There's so many people that are trading so many things at all times. Like, it's never going to be just one. Like, there's just so many things going on. It's crazy.
Yeah. Soleil, when you
heard
were
that myself.
talking, Soleil, when you were talking, I just thought to myself, and I'm not trying to feed into the whole strategy bank thing, but it's like, it's almost like the equivalent of like someone walking around saying like, I don't understand what JP Morgan does. Like, they don't even really do anything, right? Like, what's their business? It's like, well, they're JP Morgan, but I don't understand. Like, what's the product? What do they do?
Yeah.
They do a lot, but Bitcoin can do it better.
Well, it's effectively strategies like it has the possibility to be the Bitcoin Berkshire Hathaway of the future, right? Like, they've got just more capital than anybody else, and you can start leveraging it in different ways in a new monetary ecosystem as collateral. And I'm bullish a collateralized ecosystem. The collateralized markets have been growing drastically everywhere, so I feel pretty comfortable about that. Anyway, cool. All right, we're about an hour 40 in. I think it's probably good to call it. We good? Anything else anybody wants to hit on? Banks custodying Bitcoin. I mean, that's on the horizon. Cantor, $2 billion lending program. Mortgage wrapped credit products. I know apparently NYDIG has a SOFR plus Bitcoin loan coming on the scene, I think sometime within the next couple of months. I think they announced it in December or January, which would be incredibly appealing, right? Being able to monetize your Bitcoin stack at a reasonable interest rate. Whether or not you want to go buy a home or do whatever that may be, but it will be fascinating to see how that plays out. Additionally, banks being able to custody Bitcoin opens up a whole new world. Like, we're going to see this play out over 36 months, 48 months, where banks that are custodying Bitcoin are going to be, they're already used to lending products, and they're going to be able to lend combined wrapped credit products. Also bullish on this future of wrapped credit products, where you've got a mortgage, mortgage on a house, mortgage on a commercial building, like with a Bitcoin kicker. So you've got this wrapped component that now provides the lender two forms of collateral if you default, which is incredibly appealing. And banks are going to start rolling this stuff out once they understand the liquidity and the view as collateral. So exciting stuff. We're going to see it's happening every week, right? Like, there's new stuff every week. It's going to keep going.
Yeah. Jeff, do you want to go around and do like final thoughts?
Yeah, absolutely. We'll go around and do final thoughts. We will start over with maybe you, Dan. Any final thoughts? Bullish. We're at Bitcoin 84,000. Josh Man
I
is
mean, Josh called it. That's my
Josh
final
called
thought.
it, which is
Josh called it.
Josh called it, which is
I mean,
crazy.
he's bullish, so the sun is shining a little bit on our situation, whatever you
Yeah.
call what's going on these days.
The diving board looks good.
Yeah,
It's either close of close of business on March 14th or open of business on March 14th. It could be either. If this thing moves on March 14th, 15th, it's gonna be crazy. There's no other word
Whoa.
for it.
I'm just not gonna-
Like Josh is from the future, if that's the case. Over to you, Tim. What final thoughts?
So two things. One, like we can, because he's so public, we can see how hard Saylor works, right? He does like 7,000 podcasts a day. But just kind and funny, right? When I saw him at the conference, he like shook my hand, threw his phone to the guy in front of me, was like, let's get a picture, right? That's very kind. It's very funny. And then Fong today, we had an hour scheduled. We went about 90 minutes. I still had questions I hadn't asked. I just skipped over a few. Could not have been more gracious. I'm really excited to actually listen back at the interview and to share it with everyone here in a few days. And yeah, I just very gracious and yeah, I didn't even get to all my questions. We were going for like 90 minutes. So like if like I don't think we're gonna have a shortage of things to talk about here for a while.
Yeah, absolutely.
Those are my final thoughts.
Yeah, I mean the amount of things that have just come up in the last 7 days. It's going to be another next week. There's going to be another 15 things that we're going to talk about. It's just the information is we're taking it in like a fire hose. Over to you, Soleil.
Yeah, so all of this talk, Saylor's presentation and everything, it just reminds me, Strategy was a zombie company. Bitcoin, basically saved their bacon. Other companies are copying it, and now it's being pushed out to countries. So there's our zombie companies out there. You could even consider the United States potentially as one, right, with our ballooning debt. And zombie companies are now going to be able to save themselves in the exact same way. So yeah, between just thinking about that and Richard Byworth's words during your interview, I'm just kind of re-energized. So can't wait.
Yeah, I mean there's so much bullish news, right? I think this is one of those situations where a lot of the world doesn't. We think a lot of the world is consuming the same information that we are at the same time we are, but the thing is, people can only consume so much so quickly. And even me, I feel like I'm behind. I mean, I'm on Twitter a lot, or X. I'm on Twitter, I'm on X a lot, and I quit my job, and I'm still like, oh my god, I can't even get through all of this information, and I'm like trying to learn as much as I can as quickly as possible. Meanwhile, 99.9% of the world are NPCs, and they're watching Love Island or Love is Blind on TV or whatever, right? Like
What
they're
is
just
that?
yeah, they just they're on Netflix, they go home, they make dinner, they go back to work, they're zombies, they do it again, and they think their 401k is going to save them, but reality is debasement is crushing them. And if we get an inflationary situation again at any point in the future, people are going to freak out because having a dual inflation peak is never existed in a lot of people's lifetimes, unless you're significantly older and we're around in the 70s. It's going to be a shock for some people. So a lot of interesting and exciting things on the horizon. I feel like there's some information asymmetry going on, and a lot of people do not know these things are existing. So I think we're going to be in a situation August, September, October, looking back on where we are here in March and thinking, yeah, it was really obvious. It was a really obvious trade, and there was really obvious information asymmetry. So we'll see how it plays out. I'm very bullish for it. The big print, yeah, money printer go burr. It seems like that's the only solution, right? Every way I slice and dice this thing. It seems like more liquidity is coming to the market. Yeah, and not financial advice, but should you buy MicroStrategy stock? I think the answer might be
Wait for it.
anyway. That's a better one. Should I buy Bitcoin? That's a better one. All right. Well, we got 11,300 viewers. Thank you everybody for listening. Appreciate the time. As always, we'll be back next week. Actually, we might be off next week. I'm on vacation next week. So I don't know. We'll see. We'll play it by ear. But I appreciate it. And we'll catch you later. Thanks, everyone.
See ya.